Hello, everyone. Thank you so much for joining us today. We are honored to be sitting down with the founder of Steady State, Jonathan Libby. Thank you so much, Jonathan, for joining us today.
Great to be here.
Great. Well, we want to start talking a little bit about the industry in which you live, um, or the industry in which you work. So, if we could maybe start with what you think about the state of insurance in crypto generally.
So the state of insurance is such a unique spot in crypto, in my opinion. Uh, we you know we I think we all realize when you put $100 in a liquidity pool, where you wake up, you were always scared that you're gonna wake up tomorrow and that $100 is gone. And when I think about insurance in this space in this industry is we're in an interesting situation where we understand all the problems involved in this space, and we're trying to figure out what solutions are really going to go by like solving a lot of these risks of that $100 missing in the space, and we're trying to figure out the best way to go by solving it. But the space itself in the state is, I think, we're in the exploratory phase as a whole in the industry of insurance and DeFi insurance and crypto insurance because we haven't found an optimal solution that appeases a strong enough party or group. And the numbers support that. There's only a 900 million to $1 billion assets under management that are insured in the space versus we have $100 billion space. When I did my research originally, I had $2 billion AUM insured and 145 billion, but that was back during peak bull market. So I'm just adjusting my numbers with the shift. But yeah, it's the numbers prove it. Where there's only 1% of assets are insured, and we're in an exploratory phase trying to figure out where or what are we trying to like figure out like what's the solution to get people to want to get their products covered.
Can you talk a little bit about the evolution of insurance in crypto and where it's been and where you see it going?
I think so. The evolution of crypto is very interesting. I think there are some great projects out there that really push the direct movement forward. One thing with Nexus Mutual, they're the lead in insurance, but really what they did, they have such brilliant leadership, and what they did is they realized that when it comes to understanding insurance in the space of crypto or DeFi, there was not enough data to understand what kind of events you're trying to cover. And so their process was trying to build something called a mutual, where people come together and vote on whether or not you get that people often collateral together. If people get insured from that collateral, people often together. And then the people who offer the collateral, when someone files a claim, vote on whether or not someone gets insurance. The mutual system was actually built pre to what we have currently in our insurance markets. It's a good measure for when there's limited data and limited availability to judge something. Similar to the syndicated pool from Lloyd's of London. Uh, what what we're noticing in the space is there is starting to be a push towards evolution in the sense of realize that we live on a blockchain. We live in all the data we see is public and transparent, and now we're starting to understand certain general risks that happen or occur, and we should start looking to cover those risks and those downside risks uh, through automated systems over the mutual. Because even though the mutual is good for the start, it's had varying effects, and the varying effects were like uh, the varying effects really range a lot from uh, an event will happen and people won't vote on a claim, and it's kind of bad in the sense where like even though you're covered, if people don't vote or vote not to cover you, you're not going to cover even if the event actually happens. And the long-term push we're trying to make in the industry of evolution is automation and removing that human element as much as possible, to try to make it and rely build it on code. And rather than humans interact with humans, there's a code intermediary solving the problem, and then human interacts with code, and other human impacts the code. And rather than evaluate the problem, the code does, and people here are in charge of evaluating the code solution.
What do you find ironic, novel, controversial, and or surprising about insurance as it relates to the cryptocurrency industry?
Um, Ironic is that I said we're in a good spot in the sense of how we're evolving, but in the same sense, I don't think we're in a good space. Like we're not. It's not done well. Our insurance in the crypto. Currently, the only kinds of insurance we have is retail insurance, and they're built on the mutual. There's a couple people offering business insurance, but I don't think there's no optimal solution yet. But like really, all insurance is focused on retail. And when events happen, say if I'm getting insured for an event, say, Justin, I want insurance for an event and I get $100 coverage from you on the event. And you, when I decide to, the event happens, the risk happens, I go to you to recover the $100 that you gave me. You vote on whether or not I get covered. And so it's ironic, in my opinion, that like where we're currently at in the space or in the industry is like insurance is still, the mutual system is proving to be fundamentally flawed as a system because we're not providing the optimal coverage. An event happened just recently. I can't remember the name of the protocol back in February, and an event and the event happened. Everyone was insured, but the people in charge of voting on whether they get insurance, none of them voted, and so no one got covered for their downside. And I think it's ironic that we're trying to cover insurance, but we're built on blockchain and code, but we're suddenly expansive on the idea of human error. And the goal is to decentralize and live on smart contract code, and we haven't done that yet. And it's just like, what? And I think but I think the reason why is because think about insurance, people are trying to share very specific risks. I think that's the wrong approach currently where we're at in the space. Rather than insurance often covers very specific risks with very specific criteria. I think the process approach should be standardization and generalization and actually build it into an options derivatives market type deal in the sense where you make an agreement that if this event happens generally based on XYZ criteria, like comparisons, like this generally happens when the event occurs and the event actually happens, then you're covered and you're not, rather than, well, it's a flash loan attack. You say a business is insured for flash loan attack. You're like, well, it's a flash loan attack, but they entered a bug related to this protocol, not this protocol, and a black eye exploit. Like if the event happens, cover. And that's what I think we should be doing on smart contract code. And I think that's ironic is that we don't live on that yet.
Can you elaborate on that point at all in its various facets, whether that be from how it works in the traditional industries or even kind of your experience of insurance?
Yeah, so my background, well, first, I have trouble understanding the question a little bit. Elaborate on what particularly?
Can you elaborate on the way in which you think insurance should be implemented and what that would look like in crypto
yep.
and or DeFi?
Absolutely. So I think we look at a lot of our systems in finance and crypto, finance, institutional finance, and everyone views them as like broken or flawed. But it's not. But I think if we take a lot of the systems we apply in normal financial industries and then readjust towards the crypto model, they'd work even better. In the sense where like a lot of people abandon finance because they think it's just inherently flawed, but it's not inherently. It's just flawed based on the model we built. I would say with insurance, my background is I learned under some of the top executives of the Lloyd's of London, a former CFO at AIG, and I've worked in this space have a couple of years of experience in this space as well, an alternative in normal insurance. I would say the current space, when you think about events you're trying to cover in crypto, you're trying to cover catastrophe events. And that's the one mostly what you're scared of. It's a catastrophe event. If that catastrophe event happens, well, then you're like you want coverage on that. And a catastrophe is market systematic or technological. When you think about catastrophe events in the regular world, the approach businesses take is if it's on transparent data, if it obviously happened and we can fully understand what happened, then we believe, or like the business believes, you can do something called parametric, which is an approach where agreement that if the criteria happens, if the event happens and it does what we expect it to, like an earthquake happens and it's like whatever number on the Richter scale or above, then you get covered. And how you're covered is the average rate of the events happening when this event happens in your area, let's say. So if the average payout is 60 million, well, you're getting parametric insurance is automated in the sense where it's all in transparent data. If an event happens, it happens. You meet the criteria, and you get paid the automated 60 million. I think what we have to take with approaches to DeFi and crypto is you have to apply those kind of models to catastrophe events we have in regular crypto to what we're doing here. Generalize the risk, standardize it, and start trying to understand, like, if the event happens and you're covered. If it doesn't, you're not covered. And create that kind of like a parametric agreement where two parties agree that it's on public transparent data. We know what happened. We have postmortems. We can figure it out very quickly. And
Do you have any other comments on that topic?
In general, like in insurance or in DeFi insurance, what particularly?
First, in general insurance, and then we'll go into DeFi after that.
I think that approach is really, really good, and the parametric approach. And if you look at where the industry as a whole is moving in insurance, is technological risk is viewed as catastrophe events. White papers have been made. There are the industry of insurance, but it's highly regulated and highly hard to evolve the space. But the innovators in insure tech are trying to push the industry towards realize that technological risks are catastrophe events that can be automated and solved through smart contract technology on the parametric approach. And they also understand that like the future of insurance is securitization. They believe the future of insurance is rather than being looked at as a separate policy or like a separate industry, it should be viewed as a new financial asset class that can be used by other groups. And we see it being used through insurance, reinsurance, insurance and securities, and there's a push to move farther to another level. The events I'm trying to cover, or we're trying to cover, are catastrophe bonds, catastrophe risk, and there are a lot of models to borrow from. But the industry of crypto, if insurance is already moving the same route we're trying to go with our product and our project, and so like we're not spinning the wheel, we're literally just applying what everyone knows is already true.
Can you explain catastrophe risk and why Bitcoiners need to know about it?
So catastrophe risk is an agreement that so as a Bitcoiner, your bags are important to you. The one thing you never want as a Bitcoiner is wake up tomorrow and your bags are gone because you invested it, let's say, in Badger DAO and turn it to it's put it on the ERC20 network, and then suddenly Badger DAO is hacked and all your tokens representing your entitlement to the new Bitcoin you've staked are gone. so the thing here, in my opinion, is like for Bitcoiners, is catastrophe risk is important because if you want to involve with DeFi, if you want to interact with crypto, if you want to really use, not just hold your Bitcoin, but interact with it and grow it and establish it, you are exposed to a lot of risks when you do that. And catastrophe risks are like technological events where bug gets hacked, black hat exploit, things go missing, or market systematic, let's say, and DeFi just falls apart. You are exposed if you want to be involved with crypto. And it's really important that we realize that if you want this kind of coverage is incredibly valuable if it's built correctly for you guys and for everyone, because in the end you need to recover your bags and you make sure if something happens that you don't lose it. Bitcoin for a lot of people is a lot of value. It's just, whatever it's defined as, a store of value currency, but in the end you can hodl your gold rocks or your digital gold and or you can actually use it and grow your gold rocks by interacting with systems. And long term, as financial markets flow, as capital markets flow, you're going to be doing that long term. This coverage is something, even though maybe we're months away or years away from serious coverage, Bitcoiners and DeFi and crypto users should be considering that now. And what's the effective way to get that coverage? And automated smart contract technology, in my opinion, is the solution.
Why do you think that?
Automated smart contract solution, because currently in the space of insurance, when an event happens, currently in the space of crypto or DeFi, if you want coverage, you want any kind of level of coverage, you have to go through the mutual, or the mutual system is kind of what's being built and established. In the mutual system, you are relying on humans to vote on whether or not you get coverage for an event that happens. The problem with this system, in my opinion, is that it's expansive. The goal is if you put 100 guys in a room or 100 people in a room, it should be minimizing human error in the sense of that's what kind of the goal is. But it could actually maximize. But what we're seeing currently is human error is actually maximized when like this happens, in the sense where like people don't want to play rules of the game. They want to play whatever is in their best interest. And automated smart contract is, I think a lot of the events they're trying to cover can be automated and actually just generalized. And if an event happens, then pays. like an option or a derivative. And automated smart contracts can take that human element of the mutual system and that approach and challenge it by bringing it an intermediary that is unbiased and will just agree that if event hurt happens, then coverage. If event doesn't happen, then no coverage.
How about DeFi when it comes to all these topics? So, for instance, what's the state of DeFi insurance?
The state of DeFi insurance is in a weird spot, like I said in the beginning, where we're in a spot where we're evolving. I think we're challenging the mutual system. Everyone's looking to challenge it right now and realizing there are two things we're really realizing. I think that industry is starting to actually lean towards, which I leaned towards very quickly when I started getting seriously involved with building solutions in the space. Is mutual system. A lot of the risks we're trying to cover are actually catastrophe events and can be translated on automated technology, similar to the parametric approach for catastrophe events. The second thing we kind of started to notice is if you want coverage, you on say a protocol, you have to file for insurance on coverage on every single protocol you want. But it's ironic that the risk you're exposed to, the DAO is responsible for, the protocol is responsible, or the group you're involved with actually is the ones responsible for covering that downside. But ironically, there's no insurance for business, but you're totally exposed. If you put $100 in liquidity pool, it's your money on the line, and the business shares no real responsibility besides defamation. And that's the thing we're starting to really realize in the industry space is these two things. Is that things should be automated, things can be automated, and protocols and businesses, we have no business insurance, and that seems almost necessary right now.
What is surprising, ironic, novel, or controversial about DeFi insurance today?
What is ironic about insurance?
What is surprising? What is surprising, ironic, novel, or controversial about insurance in the DeFi industry or DeFi
I'll say something
insurance
controversial.
apps?
I'll say something controversial. Mutual systems are not a good system for insurance, and they never really will be long term. They are not scalable, and they will not actually be effective when building out a system where you want fair games. Because in the end, it actually skews away from fair game and gamification because everyone's looking for their own interest. And ironically, it does not work well. That's the controversial take I'll take. And the risks you're trying to cover for are automated. And yet it's ironic, in my opinion, it's incredibly ironic that we are a system that we believe in code, in smart contract code, and the agreements of if an event happens or anything happens, like we rely on codes. When it comes to insurance, one of the most important asset classes, or one of the more important things about long-term growth or sustainability, we rely on humans. That's probably my biggest controversial take I'll take, and I think it's a broken framework naturally. And it's the events you're trying to cover are catastrophe events. Therefore, these events can be seen on the blockchain or the DAO. They can be identified and transferred.
So that is mutual assurance.
Mutual insurance, yep, is a broken system. It'll always be a broken system.
For those who don't know, can you explain what that is?
Mutual insurance is an agreement. So it's the idea that people come together. It's the agreement that groups of people come together. Sorry, one second. So mutual insurance is the agreement that if you want coverage, or it's the idea that if you want coverage, people put money in a massive pool of money. Like people put their collateral, their tokens in a massive pool, and it has a value to it. These pools are meant to cover very, very specific events, such as smart contract failure on Curve in this specific pool. People offering collateral coverage in this system, people are responsible for deciding who gets paid what for insurance. When it comes to, and then with the system after that, what we're trying to build from here is we believe if you want coverage, then you pay a premium to that pool, and you pay a premium to everyone involved invested in that protocol, or like in that pool providing money for for them covering your downside. And when an event actually happens, let's say the event happens, which is sad, you file for insurance with this group of people that provide the money, and they choose whether to pay you out. In my opinion, that is a sorely broken system. Let's simplify it. And this is what I always say to simplify it when I talk to people who already agree with me. You know, a lot of the people I've noticed that are really intelligent in the space or have a good background. I'm not, and I've noticed my investors and other groups is they're trying to realize like they understand what I'm getting at. If you want $100 in coverage and I put $100 down to cover you, and the event happens, you come to me and said, hey, you're paying me a premium, and you say, hey, the event happening, can I get covered? And I decide whether or not you get my money. And to me, that's sorely broken and not scalable and not a long-term solution for the space or industry. And we've seen many problems happen in this mutual system.
Any other comments on that topic?
We are on smart contract technology. We are built on automated code, and yet we go to people to solve our problems with it, solve these problems. It's ironic to me that we rely on people to solve one of the biggest problems and solutions we need to make crypto mainstream, rather than the smart contract code, which is a real solution.
What breaking news are you keeping an eye on when it comes to insurance in the general crypto industry, not just DeFi, but the general crypto industry?
Um, Insurance, like, what am I keeping an eye on? Could you elaborate?
Is there any breaking news that you have a strong opinion about?
Um, Breaking news in recent events. Um, I think probably one. I would say I would definitely say I know a lot of news that's going to be coming out that I can't share yet with the OCC, but I would say the thing that's always interesting to me is not necessarily related to insurance, but it's just in general is a lot of these. It seems to be the news of countries, small countries, filing to make Bitcoin as legal tender, and on the same end, major countries and global countries that have dominance currently banning it or trying to regulate it and stop its growth. It sounds. I think we're really watching some power dynamics play out currently in our system, in the sense where we're starting to see people really challenge and making a long-term play to really make their country much more powerful than what they thought, and the people currently in power are fighting it. And it's very interesting to me that they're not looking to expand, rather to disseminate any kind of potential risks, rather than be expansive on the technology in the future of how money, finance, and is going to work.
What about hacks and rug pulls? What are the implications thereof when it comes to crypto and insurance?
Rug pulls suck, man. Yeah, I'll be blunt with that. What is it? Mark Cuban just got rug pulled on Titan. I'm not sure if it actually was a rug pull. I've heard a couple things, but uh, um, man, um, my thoughts my thoughts on rug pulls is that people are always trying to find ways to exploit other people. And I think these black cats events, all these different kinds of risks, are always going to be apparent in the space, and we're look like this needs to be mitigated. Technical black hat exploits are becoming an increasing problem, not just for crypto, but for global finance, for global money, for everything. And it's really important now as we start developing as uh, I think it's really important now as we start developing as a nation or as a country, or like we start realizing these risks are very, very serious. And um uh um sorry. So like black hat exploits and all these kinds of risks are really, really important. And like we need this is a fundamental problem in crypto. And if we can't get that covered, if we can't get that covered, we're never gonna go mainstream. And getting that stuff covered, getting that stuff protected is really, really important in starting to cover that long term.
What's your biggest passion in crypto and Bitcoin? What brought you to it and what keeps you involved?
Um what keeps me involved in crypto long term, or keeps me wanting to be involved constantly. Um, 1 second, please. Um, my passion for crypto and DeFi really kind of pulled out in this when I found I'm a big finance nerd. I love finance, and I started to realize I kind of started to fall in love with DeFi when I found out interest rates are paid by the second in crypto instead of by quarterly, annually, semi-annually. And I really started falling in love with it when I realized how quickly interest rates are paid out and how market efficient it was long term. And it blew my mind realizing this is going to put everyone in banking out of the job if they're not careful, or it doesn't integrate well and moves into a new system. And then I really fell in love even deeply with DeFi when I found Year in Finance. Year in Finance used automated smart contract code to find the highest lending for any kind of stable coin. And they kind of move money naturally between systems. And it blew my mind how powerful that would be as an application to actual banking institutions as a whole long term. And to me, I kind of realized this must be the future.
Can you tell me about your experience in crypto industry and what you've learned? What surprised you about it?
Um, what surprised me is how it wasn't like it really was more efficient. Like when I first like I didn't when everyone gets in crypto they don't know where anything's going or anything's involved in that space. You don't really know like what the you don't really know what the space really is like before you get involved. What blew my mind is how it's more efficient than any kind of financial market could ever be in regular crypto. Um, anything we could actually have in real financial markets, crypto can do better on a finance perspective, and that just absolutely blew my mind how the efficiency of power that could be offered from that kind of a solution.
Tell us everything there is to know about steady state.
Steady state is business insurance built on automated smart contracts for protocols. We're actually challenged the way insurance approaches, and we're trying to turn insurance into a financial market in the sense where rather than one individual pool covers downside risk for a protocol, we use automated smart contracts as a financial intermediary between parties, and we identify use smart contract risk as a financial intermediary between parties, and we identify if an event happens or a risk happens, and you're covered. And yeah, exactly that. And but what we're trying to do is businesses post coverage like a bond. Let's say they post $20 million of downside risk on an automated system to cover flash loan attacks. Rather than one system covers it, one pool covers, people opt in capital or stake coverage into a fund pool, and they can cover the downside of the risk. You put $100 in and say you receive the premium of taking $100 on that downside risk through the automated smart contract code. That's all right on the parametric approach, where if you put $100 down, it's good in the sense of like you always get high premiums because it's parametric, it's fixed rate, it's fixed payout. However, you can put $100 in, say your payout in Aave covering your downside risk in Aave is 20%, but your downside risk if it happens is 100%, which is really awful. So what we're trying to do, and you're exposed to a lot of risk by investing in any kind of liquidity pool, any kind of liquidity mining. So I these kind of liquidity pools, liquidity mining. So what my suggestion is currently is that you need to cover the downside by actually expanding your risk in multiple pools. and using some kind of a CDO model or collateralization model. So if you have like say Yearn pull together Aave, Curve, and Yield app, all having coverage pools. By opting a collateral cover and staking the downside in a pool attached to all these different pools, let's say your exposure to an event now is 20% if an event happens rather than 100%, but your payout, let's say, is a 25% variable rate on all these different kind of payout premiums and 5 different tokens, which makes a really attractive solution long term and very scalable. And as a protocol, if you want coverage on these events, say this one's 80%, 85, and 85% collateralized, they're not fully covered for the events that happens. By opting the collateral together, they say the pool now is the index pool is 85% collateralized, but now all of them are 100% if an event happens until the pool empties. So your payout solution then grows for the protocol, and they get the coverage they need while actually covering the downside risk exposure you have to yourself, and by actually through an expansive measure. Now scale that. What we're trying to do from here is say you have a top 100 DeFi index, and you can stake $100 in the top 100 DeFi index. What are the events that a chance that 5 protocols and a top 500 DeFi index file for catastrophe insurance? It's very, very low. It's less than 1%. Your downside risk in a black swan, let's say 5 events happen, is 5%. But your upside, let's say, is a 25% return in 100 different tokens that you can buy and sell, you generate hourly. And we're challenging liquidity insurance because liquidity has been very awful insurance. We're challenging liquidity by saying if you stake $100 or $1,000, like you should be. We believe by building it, we're trying to build a bond market system through an automated market maker, and we're trying to challenge the way liquidity works in insurance. If you want to stake from insurance, it takes 7 to 10 days to unstake or uninsure, and rather than do that, we're trying to do. We believe the system actually, rather than to replace liquidity, rather than unstake slowly, is going to generate new liquidity. And we're going to do that with a bond market system. We're trying to build on an automated market maker.
What have been some of the challenges with steady state, either as an executive, as an end executive, or as technology builders?
Some of the challenges we're already seeing is like this is really revolutionary tech. We're working with a lot of different people. We're talking with some of the biggest players in the space in technology and node systems. Where what we're seeing is the challenges is really we're building the first kind of risk nodes in crypto to identify event validate events where it's really we're on the cutting edge of technology. So when it comes to challenges, it's making sure everything's buildable and making sure my developers understand while we're developing this together that like this is like we have to focus on certain precision attempts of what we're trying to build, like focus on precision of different kind of what we're building. Precision is very important, and a lot of times understand making sure everything's logical and plays out well, and make sure as you build it out, everything flows well, it's translatable, it's expansive and scalable. And though that's kind of a broad level approach, it's been very easy. A lot of the events I think a lot of protocols have with starting or launching a product, we haven't had many of those problems. We've had some great backers very early. We've had a great time building this team. It's been very good overall, and we're really excited. But yeah, it's been very, very exciting. But so that's kind of the problems we're having is more on the technological side. It's like we're always like figuring out how is this next. We're on the cutting edge of technology, so the biggest problems we're having is making sure that we're staying creative, but also sticking to reality. And that's kind of what this project's always been focused on: is making sure everything we build, there's some kind of a standard around to show that like what we're building is there's some kind of proof that this is possible around the crypto sphere through technological code. And I think some of the risks we're having are dealing with making sure that I get my logic-minded people to be creative and realize that like this code is actually translatable with this. I have a developer background myself. I've self-taught myself Python, machine learning, mathematics as well as Solidity, and obviously mathematics isn't coding, but you have to understand linear algebra to do machine learning. And so I'm a big believer. I'm able often, but I'm a creative mind. So the hard part is making sure that my developers focus on, being creative while also sticking with logic at the same time and trying to make sense of both worlds at once. But it's been really, really fun and enjoyable working with them. I have some brilliant players on my developer team, my tech team. Been around since 2011. So much experience. Like you can't have more experience. Really, honestly, more experience than being around since 2011 in the crypto space. But like they're brilliant, amazing, smart, and talented, and really building out some great solutions.
Do you have any other comments about balancing logic and creativity?
Yeah, I mean that's the thing. That's what we're all doing in crypto. That's what we're doing, in my opinion. It's in financial markets. I think we have an assumption about how things work or how things are. And the reality is, we think it works this way, but it works totally different. And then it's actually like that, you know. But we realize that how it happens, how it gets there, is totally different than what we think, and how easy and honest it is. Crypto is somehow in the logic side makes that a reality where things work as we think it works because it has to, because that's built on the public transparent code. And then the creativity side is how you take this system and you push it to its limits. That's what we're doing all the time in crypto. The balance of creativity and logic is so essential as we develop and build out. If like you think about Alchemax, I think it's Alchemify X, run by. That's an idea where you put $100 and you take a 50% loan on $100, and that initial $100 grows at a 30% rate. That's mind blowing. How powerful some of the solutions being built in crypto are, and that demands creativity. But it's all creativity that's built on logical flow, and because of that's the space we're in. So like those are the two aspects are incredibly essential for any product or project in the space to be successful. Is is to be logical, but make sure your logic is creative and you're always challenging the way we see things and trying to build something new. If you don't do that, there's real questions about a long term fit and actually being able to find your place, I guess, in space. And so like it's essential in my opinion. And getting people to, and getting crypto, I think, has some of the most brilliant minds because they're able to do that. So many people are too abstract and creative. So many people are too logical. But you learn in the space if you do it right, especially in these DeFi communities, to be perfectly in balance with these two dynamics, and you learn to actually thrive in that system. And I think so we have some of the brilliant minds in space in the world because of that.
Tell us more about steady state. Is there anything that you did not go over that you think people should know about steady state?
The index pool I talked about a little bit is one of the we're building the index pool. I think it's one of the most powerful measures that's going to be in crypto. We're turning and we're challenging not just how we're building business insurance because we believe businesses are responsible for the downside risks that happen, not retailers. And we're really trying to push that limits there. And we're doing that using creative measures by building a financial market out of insurance, which we believe and the industry of insurance believes is the future of insurance. And we're pushing insurance to its limits, not just in the real regular world, but in the world of regular insurance. And I'll tell you what, some of our investors are insurance guys and they're eating it all up because they've been pushing this for years. And like finally someone's building it and we're building a DeFi even better, they think, because we're pushing cutting edge development on some of those cutting edge technologies in the world. And and I believe the index pool model we're building is going to be one of those powerful measures long term, not just for DeFi degenerates like myself. And it's going to be powerful measures. It's going to be a powerful measure for parking capital for whales, for traders, and for institutional finance that's already interested in the product we're building. And so we look at this as the first avenue for they can actually involve crypto and actually want to be involved.
You mentioned that you were at an event last night. What was on people's minds, and what were they saying about it? And what was
They
your
loved it.
opinion?
They loved it. Sometimes I nerd out. So I'm checking out Austin to launch my startup here, and I'm really falling in love with the area. I'm falling in love with the team. I'm falling in love with the community. I've been in Miami, New York City, San Fran, and for some reason the Austin community is so vibrant. Even though I think it's still developing in the early stages, so I got very skeptical when I first found out about Austin. Because when I visited other projects like Miami, it's all investments, but I want to be around developers and real community members. And I found that in Austin, Texas, where it's a crypto community being built by developers, not just investors. And we threw an event there for Steady State for me to test out the water, see what it's like in this area, and I really started falling in love. Because and when talking about Steady State, A lot of these people, steady state, a lot of these, when talking about steady state, sometimes I nerd out and I talk way too fast. And I start nerding about finance and I see finance guys. But like a lot of very positive was what I got from this project and we're building is it's sometimes if I was talking too fast, I went over some people's heads. But the finance guys I was talking to, the finance nerds, the hedge fund guys, the investors, they're looking at me like this is everything I'm building this product from is built from regular finance. And they were kind of shocked when I started explaining what I'm building. They kind of realized why isn't this built yet? People involved in the space realize this is like the next solution, and it's obvious because we see it in regular finance all the time. And the backing from steady state is the index pool model and the state exchange are really freaking cool. But also, what we also got is like this is the obvious next solution for insurance in space and how to push it to the next level, and even maybe bring up some challenges how we do insurance in the real world.
You mentioned hedge fund guys and traditional finance types. I'm curious, like, what is the problem that everyone sees so clearly, and like, how is steady state the solution?
The obvious problem that we're seeing in this space is that you, the retailer, have to hold all the downside risk in every event. It's not. It's incredibly inefficient and incredibly immoral, in my opinion. If you want coverage on, you have to file different insurance for every protocol, every pool you invest with across every single kind of uh, DeFi protocol you're in, and project you're in with insurance. And the irony is businesses that's incredibly inefficient in the sense where you have to get insurance for every event you're trying to be a part of, and then businesses hold none of the downside risk on their own code for their own protocol that they are building. And if you put money in the liquidity pool, you lose your money. We think that's ridiculous, and we all identify that as the big problem. There is no business insurance. Protocols need insurance for catastrophe events to cover the communities, to cover their investors, to cover liquidity providers everywhere, because that it doesn't make sense that if you're using their protocol, that you're not covering your downside. The protocol is not covering their downside, at least a little bit. We want the steady state mark to cover that downside and actually be like a brand that you see steady state. Steady state back, steady state back. There's a level of coverage similar to what we're trying to do is like with the FDIC. There's a level of coverage that every protocol gets, and you can know something about the protocol, not only that it's covered, but that we trust the system enough to give them insurance and give them that base layer insurance that we believe to protect their communities. And that's what we believe this is this makes total sense to us. Business insurance should cover the downside risk. It should be built into a financial market. And the steady state brand of when we do this will be that brand on Curve, on Uniswap, on all these different kinds of great protocols we see in the system. And it'll say, we trust this system, we're covering it, we got this. And it'll let everyone know that they're legit, they're powerful, and that you can know that you're covered at some level if it happens, and you're covered by the business for being active in that part. Businesses should be protecting their communities, and we're pushing that model to its limits.
Anything else about steady state?
Um, yeah, the thing about States I want to say is I got some brilliant players on our team, not just on the investor side, but on the actual team. And it's been mind blowing the short time working together how brilliant all these guys are, and how much they've like put up with me, ironically, and but how brilliant they are and how much they are actually like building solutions constantly. And for me, I'm very excited for what's to come.
The past, present, and future of Bitcoin, blockchain, and crypto and DeFi. Like, what's your 1,000 foot or 30,000 foot general view of
So
this industry?
So I have so the past, present, future. I have a theory. We are there. We kept saying this is like a dot-com bubble this year. We haven't reached that era yet. We are in the next technology. We're in the internet of money, the internet of things. This is pushing it to the internet of money in a specified kind of system. I think we haven't actually showcased crypto yet. We haven't showcased Bitcoin. We haven't showcased DeFi, NFT systems. I think my theory since last summer has been 2017 was acknowledging 2018 was acknowledging that crypto exists in the industry. 2020 to 2021, my theory was right. It wasn't going to be that big bull market everyone was waiting for, in my opinion. It was going to be a showcase that this thing that was introduced before can actually do stuff, and it's going to be on people's radars. And the long term goal is not just the 27, but not it's going to be this next bull market we're going to see very long way, a couple years away. This is a showcase. This bull market was the showcase what crypto can actually be, and we're seeing. And my theory is that not this bull market, but the next cycle, we're going to really see serious integration of DeFi and crypto and Bitcoin into the real world. And I think we're already starting to notice that. If you follow trends right now, a lot of people from FANG, Facebook, Amazon, Apple, Google, Microsoft are quitting their jobs and actually looking to actually build out DeFi and crypto and Bitcoin technology, all these different technologies, and they're trying to push it with UX UI solutions and really trying to build out products, realize this is the future. We're starting to see an exodus from these top businesses, these top technology companies moving into decentralized finance. This is probably the future of fintech. And so what we're seeing is this is a showcase of what DeFi could do, and everyone's all in now. And we got to figure it's not everyone's all in, but the smart people are starting to really get all in. But this is not the bull market full. The next time around, the next cycle, every couple of years later, is going to be the real showcase and the serious integration. This is the showcase of like what we can do. The future, and my future projection is the next bull market is going to really DeFi is going to integrate with the world, and Bitcoin and crypto are going to integrate with the world, and that we are still so early. And I think sometimes it's harder. I felt like I was so late getting involved in 2019 and 2020. The reality is we're still so early, and it's really, really exciting how this is all going to build out. And I think we are not in that big bull market we dream of. The next cycle, the next time is going to showcase DeFi and crypto and what it can. This is a showcase, but it's going to actually integrate with the world, and I'm really excited for that next one. And I want Steady State to be a part of it.
What led you to develop that theory?
Well, so what led me to develop that theory was really, I think, just exposure to the space, realizing that like a lot of what was built in 2017 was a lot of nothing burgers. You think about the ICO, a lot of the massive ICO crash. A lot of people were saying they want to build products, but they weren't building it. They were just raising money, and we were really sure what the outcome was going to be. And one thing I noticed being back to being involved with space is that this stuff is the future, but we noticed that like a lot of this stuff, what led me to realize is like a lot of this stuff is clearly the future, seeing DeFi summer, what this could possibly be. But it's the realization that we have some brilliant programmers and developers, but no one's challenging UX and UI. And for me, it led me to believe like all this stuff is incredibly valuable and amazing. And you can get anyone in finance, or in my opinion, to look at it and be like, holy crap, I'm going to lose my job if I'm not careful, if I'm not involved with this stuff. But when it comes to the average person, the retailer, or even the average institutional guy, this stuff was so UX UI not friendly, a lot of these projects and protocols, that they can't, they won't be able to adopt a system and to integrate a system into their processes regularly. And and what happened in my thesis was built off the dot-com bubble. When the internet was showcased as being a powerful tool, a powerful measure for long-term growth and value, it wasn't like just one event, something dot-com bubble we often think. What happened was a lot of people in tech realized early after events started happening, showing how powerful the internet could be, and they started leaving their jobs, challenging the UX UI, and trying to build their own projects or products and ideas. And that we're in that part of the cycle, in my opinion. That's where like, and the next after these tech people realized this stuff's the future, the smart people, they started challenging the UX UI approach and really started pushing it to its limits. And that's really that's where I think we're at. You know, I'm basing a lot of this thesis off the dot-com bubble, but I think because that's the closest thing we have to showcase, and that's where we're in that part of the dot-com bubble where people started leaving their jobs and realizing and trying to get involved with the internet, or crypto, started building things in deep crypto and the internet, and that's what we're here. That's where we're part of that phase. But what happened is after that happened, the internet boomed. It started becoming much more of a normal feature in a normal person's life, and it became that normal feature because it was UX and UI friendly. And because it was UX and UI friendly, like people understand it, could integrate it, and could work with it. We we are not in that place where the normal person can interact with the system, but everyone, you see it, we see it. Everyone's leaving their jobs, everyone's moving in, and trying to adopt into DeFi. People realize it's the future of fintech and fintech solutions, and we're seeing people at Microsoft, Amazon literally leave their jobs. Two of my guys are Microsoft, Amazon, Google people that involved with DeFi since 2011 in crypto, but they're still there. They're quitting their jobs and leaving and challenging UX and UI. Every brilliant founder I meet is like all thinking UX and UI, including myself, and we're like they're those brilliant founders I meet, and I'm trying my best to be in that category, but like I'm not. They're all amazing, but like those brilliant founders is um like they're all thinking UX UI, which means, and they're all coming from top tier funds, top tier projects, and they're the ones pushing and challenging how we approach and see the future of crypto. And that's like where I think we're at. Is we speak the inside the internet bubble. We look where they were at and look where we're at currently, and we're in the same spot. Where the next flow, the next cycle, the internet reach out was the big showcase. Any more questions?
I'm just thinking about a question. You've mentioned the .com bubble a couple times. Why?
I'm more thinking the dot-com era, but we're not in that bubble yet, that serious bubble, because that's what happens when a new market takes over. We know how market cycles work on a trading market flow. So I would say the dot-com era and the dot-com bubble is kind of integrated the same thing, in my opinion. We're not there yet. I think the .com, the internet, and how the technology worked is the biggest, the closest thing we have to understanding how this market's going to work. I thought it was incredibly fallible back in 2017 to call Bitcoin a tulip, because there's no way to compare tulip to the Dutch tulip era, or when the Dutch tulip market back in God knows how long. I thought that was really the fallible argument because it was technology, and looking at tulips to justify technology is fallible, because technology evolves, tulips can't evolve, but systems can evolve, and technology systems move well together. And I think we saw that very well with the 2017, not 2017, with the internet era and like the integration. And it was my opinion very early on that like following the internet cycle, the .com era, the .com bubble, is the best way to figure out how this market's going to work, because they're the closest when it comes to relationships. They're the closest together.
So we've got about 5 minutes left. Of all the topics we've discussed today, is there anything that you think we've left on the table?
Yeah, steady state. We're excited to be a part of it. We're challenging the norm that retailers have to be responsible for their downside risk in every protocol they invest in. And in my thoughts, that's ridiculous. I think businesses should be responsible for covering their own catastrophe downside, just like how we work in normal business or normal finance. We're challenging that approach, and we're actually building not only the first. We're building. Not only are we trying to build insurance, we're turning that into like similar to like a catastrophe bond model, and we're really excited to build that out and see that come to fruition, because it's going to really alter how we see finance in the space of crypto and DeFi, and it's really going to help people realize like, holy crap, why was I covering my downside all along? This just should be the fundamental base layer for coverage, and then I get my coverage on top of that.
Any concluding comments about the industry, that is Bitcoin or crypto or blockchain or just DeFi?
The future is bright. Ignoring the price action, ignoring the flow, the future is very bright. And I think we just need to put our heads down, get back to work, get back to innovating, and get back to creating the better tomorrow that we all envision, and make that a reality for as many people as possible. that's one thing I want. My final notes on the crypto industry is the future is bright. Hold on, let's keep moving and let's keep building these cool things because we know it's the future and we know it's going to integrate and help a lot of people. And let's focus on making that better world we all envision.
Thank you, everyone, for joining us today. We've had the honor of sitting down with Jonathan Libby, the founder of Steady State Finance. Thank you so much, Jonathan, for speaking with us today.
Great to be here.
And thank you, everyone, for listening.